Yeah, hello friends. Welcome back everyone again to the Let's Learn Trading channel. Okay, so today we are going to start our new series of full course for our option tradings. Okay, so where we simplify the world of option trading for beginners. Okay, so in this video, part one of our full course, you will learn what option trading is, how it works, and why it's becoming a popular way to generate the income from the stock market regularly. Okay, so whether you are a complete beginner or someone you are who's heard about calls and puts but never truly understood them, this is your starting point for the options trading. So what is an option? An option is a contract that gives you the right but not the obligation to buy or sell an assets like a stock or index at a specific price within a specific time. So this is an option. Okay, so which gives us the right to buy but not the obligations. So just to tell you an example of that, like think of it like when you are booking a movie ticket on a weekends, okay, so where you have the rights to enter the theater at a given time at what you have booked for a movie, okay, but if you don't go for the movie at a specific time which you booked for a ticket, then we lose the booking fee. Okay, so that's how exactly the options work. So we pay a premium to get the right to act, but you don't have to. Okay, just for an example, same like you buy the movie ticket, but no one is going to force you to watch the movie. So until unless you want to. Okay, so this is an example of an options. So as I mentioned, we have two different options. So one is call options and the other one is put options. Okay, so now first we look at what is in call options. Okay, so call option gives you the right to buy the asset at a fixed price. So we will get a profit when the price of the asset goes up. Okay, just for an example, as of today, Nifty is trading somewhere around 25,000 levels. Okay, so if Nifty is trading at 25,000 and you buy a call options at 2500 strike price and Nifty moves to 25,500, your call increases in value because you bought a call option at 2500 level and Nifty is trading at 25,500. So your call options value will get increases and we'll be going to sell it in a profit. And next to call option, the other options we have is put. Okay, so put option is nothing but it gives us the rights to sell at a fixed price. Okay, so your profit will be when the asset prices goes down. Okay, so just for an example, if Nifty is trading at around 25,000 levels and we buy a put option at 24,800 on Nifty, and if the index of Nifty falls below 24,500 levels or below, your put options will become more valuable. Okay, so in the call options we have a rights to buy and in the put options we have the rights to sell. Okay, so don't worry about much if you are not able to understanding these jargons. We are going to learn everything in a step-by-step manner in this entire 1 month of series of an options webinar. Okay, so as we have call option and put options, now let's see who uses an options. Okay, so options will be majorly used by three type of peoples. Okay, so the first option will be the first type will be the retail traders. They use it for a speculative profit to gain a monthly profits by trading the options. Okay, and the next one will be by investors. Okay, so investors will be using the option tradings to protect their portfolios. They might be having an investment and to protect the downfall, like downfall or to book a profit of their investment amount. So they will be doing an option tradings, and this is called an hedging. Okay, and the third set of people using this options will be in institutions like FII, DAIs, and multiple mutual funds will be doing this option tradings, and they'll be doing this for in large volume strategies and incomes. Okay, so majorly they will be parking some amount to options to enter at the right price or to sell the option to sell the stocks at the right prices. Okay, so for that purpose institutions will use it. Okay, so three types of users will be using an options. One is retail traders, the other is investors, and the other is institutions. So in India, how options are traded? Okay, so in India, options are traded on the NSE and contracts of Nifty and Bank Nifty and multiple stocks available under F&O units. Okay, and in the BSE as well, we have an Sensex indexes available foreign trading purpose in options. Okay, so if you look at the equity trading for an intraday or multiple investment strategies, you can buy even a single stock shares of a particular stock. But if you enter into an options or futures, so here we cannot buy a single shares of an any of the options you will to buy. Okay, so here the NSE will be having a predefined lot size. Okay, so just for an example, Nifty will be having 50 or 75 lot size, and Bank Nifty will be having 15 or 25 as a lot size. So you can have a multiply of lot size. Okay, so if you want to buy two lots of Nifty, just for an example, assuming that it have a 50 as a lot size, and if you want to buy two lots, then you will be having an hundreds shares kind of. Okay, same like if you look at the multiple stocks like Infi, TCS or any other stocks, so everything will comes with a lot size. And just for an example, and call option is trading at around 100 rupees and Nifty's lot size is 500. To buy this um, call option which is trading around 100 rupees into lot size which is 50, then we require around 5,000 rupees to place and buy order for the particular call option. So same stuff applicable for an put options. Okay, if you are trying to buy an put options which is trading around 100 rupees and lot size is 50 for Nifty, then it will be 5,000 rupees required for that. Same like for Bank Nifty, it will be somewhere around 15 or 25 will have multiple times the lot size will get changed by the exchanges. Okay, so based on that, we'll be going to enter into the trades with that particular amounts. And coming to the summary of this particular video, what we have covered is we have covered what are options, what is call versus put options, and how the options works, and what is the real-time examples like movie ticket booking is similar to the options how it works. Same like we have an we'll be going to buy a movie ticket, and if you're not going to a movie at the specified time, what we are going to lose is the amount spent for an particular movie tickets. Same like is applicable for an option buyings, that is for both call options and put options. If you're going to buy an options, whatever the premium you are paid, so that will be the maximum loss amount we are going to lose if you are not going to buy or sell the shares for that particular stock or Nifty indexes. Okay, and in the part two of this video, in the next part, we'll be going to dive into an option chain reading and how to choose the right strike prices for any trades, and those kind of stuffs will be looked into in the next video. Okay, so that's it for today. And don't forget to subscribe and turn on the bell icon so that you'll be going to get all the videos which you're going to post it in this particular option webinar series. Okay, so thanks everyone for watching, and do like, subscribe, and also please throw your comments, whatever you wish to, or whatever we have to improve, or what kind of topics you are looking for, those kind of stuff. And thanks for watching, and happy trading.